In Nigeria, we've seen the market fall back for 3 consecutive sessions. Yesterday, the NSE All-Share Index down about 0.6%. Let's now cross to Stanbic IBTC to speak to Jide Allo. He's an investment manager with Stanbic IBTC Investments. Thank you so much, Jide, for joining us. It's interesting what we're seeing in the market these days, the market trending lower. And I want to get your thoughts on the valuation of the market. I think there are mixed views on that. Some people say the market is fairly priced, others say it's a bit expensive. And I think quite a few still think there is value in this market. What's your view?
Hi, Wole. Thanks for having me. I agree with you that the view of the market participants is divergent regarding valuations, but right. I don't think it's far-fetched. If you look at the market as a whole, in our own view, we think that the market is not overpriced. We think there's still a significant headroom, a reasonable headroom, and the reason is not far-fetched because if you look at across the globe, whether you're looking at developed markets or you're looking at even markets in Africa, like South Africa, like Egypt, you would notice that in most of these markets, valuations have more or less come back to where they were pre the financial crisis. Right. So the Joburg exchange, the market is back up almost to the level it was prior to the crisis. Even Egypt, that had a Arab Spring, their market has since recovered since last year. And so valuations are more or less back to where it was prior to the crisis. But if you look at Nigeria, we are still trading at a significant discount relative to where we were prior to 2008. Now, I do acknowledge the fact that there were some variables that were in the market then that are no longer present in the market in terms of margin lending, in terms of a very active retail investors segment. Yeah. But having said that, we've also seen other offsetting factors on the other side in terms of the reforms are fully settled and the market is now comfortable. We've seen significant reforms even on the exchange as well to enhance liquidity, to improve transparency, corporate governance is on a higher level. And so, in our own view, the positive factors kind of overshadow even the few negative factors that we had in 2008. And so on that premise, there's no reason why Nigeria should also not fully rebound to the pre-2008 levels, because in terms of the companies on the exchange, whether you look at banking, whether you look at consumer sectors, the companies have remained robust. They've continued to grow at double-digit year-on-year, both top line and bottom line. Right. So
if we break in terms of companies, Jide, if I can put in a word there, if we break it down though, we have banking, we have non-banking, we have particularly the consumer names like Nestle, Guinness, Nigerian breweries. A lot of people think those ones are overvalued. Do you agree?
Yes, in that context, I agree. So we look at the market as a whole, the market has significant headroom. But let's then look at the specific companies in the market. Then we can begin to tick the box and say a Nestle is probably fairly priced and now getting overpriced. You can look at the Guinness and say, okay, Guinness at the current level, based on the expectation of the numbers from the company, is fairly priced at this level. Nigerian breweries probably getting to become overreached. But having said that, if you separate those few names that seem to be trading at either they're already at their fair price or even getting slightly overpriced, there are still other key companies that you can pick across the sector, not only in the banking sector, because the banking sector clearly is still undervalued. Most of the companies in the banking sector are trading at price to book levels of 1.8 and above 2. Their PEs are still all below 10 for all the ones that we cover. So clearly, there's significant growth in the banking sector, but even in the consumer sector as well, you can still separate some names, the like of Flour Mills, the likes of UACN. I think those are companies that still have significant headroom. Other mid-tier players like the likes of Julius Berger, Okomu, Presco, they've also done fairly well. And if you look at the reforms going on in the agri sector, it tells you clearly that the sector is now revamping, and so there's significant headroom in that sector Jide, as well.
How are you approaching the petroleum marketing stocks? We've seen
it's gone off.
a mixture of results there. Jide, can you still hear me? Right, it seems we've lost Jide momentarily there. Hopefully we can get him back on the line. But I was just going to ask him about the results we've seen in the petroleum marketing industry. We've seen a mixed bag where Total is reporting pretty strong performance there. Earnings per share up 22%, while on the other hand we see Mobil Oil's profit after tax down 30% in results released recently. Of course, that industry continues to struggle with the challenges around the subsidies, the claims on subsidies. Up to recently were not paid on time, but it seems things are beginning to change a little bit in 2013. And hopefully we have Jide back on the line. Jide, I was just going to ask you about the petroleum marketing stocks. How are you approaching that sector? Because we're seeing a mixture of results between Total and Mobil these days. Hello, Jide, are you there?
Okay, hi, Wole.
Okay, great. Can you hear me now? Fantastic.
Yes, I can.
Okay, I want to hear about your thoughts on the results from the petroleum marketing stocks. Mobil reporting 30% dip in profits, while Total reporting 22% improvement in earnings per share. Your thoughts?
I think both Total and Mobil, their results are is a mixed bag for both companies, really, and it's not surprising given the structural issues that the sector as a whole had in 2012 regarding the petroleum subsidy and even their whole operational procedure that has become quite stringent, leading to a long time lag in their conversion cycle. And so what we saw was that as a whole, both companies actually had a marginal growth on their top line, but in terms of their bottom line, they suffered a significant decline in bottom line, suffered a significant decline in their EPS as well. The EPS for Total was down about 10% year on year, while that of Mobil was down 30% year on year. But having said that, if you then move forward, I think that last year was a year of cleaning out for that sector, and having done that right now, we would expect that come 2013 we should begin to see improvements in their operations, especially as they also tighten up efficiencies.
Are you allocating to that sector though?
Yes, we are allocating to the sector, but I would say that our preferred play in the sector is actually Oando rather than Mobil and Total. Mobil and Total are pure downstream companies, but we are looking for a growth play within that sector, and Oando is the suitable company for us in terms of the fact that Oando is currently on a transition phase from becoming a downstream to a mid-tier upstream player. They have a well-diversified business, and they have a few earnings accretion outlets here and there in their gas business, and so we think that if they are able to deliver on the promises they have made, Oando would be a very strong growth player and a very strong company in that mid-upstream sector, and so that's where we would like to play within the oil sector.
Can you give us a quick word on how you're approaching fixed income though? We've seen volatility in interest rates. Some people think that we'll continue to see yields come down though. Your thoughts on how to play the fixed income space?
Our own view is that at the current levels, we expect yields to more or less stabilize around this level of between 10 and 11%, given the kind of inflows that we are seeing into Nigeria, which of course has slowed down, say, in the last 1 month. Perhaps on the one hand because most of the index trackers have now more or less fully allocated, and then even in terms of the fact that our yields have also come down significantly, and there's not that much strong appetite in terms of taking an excessive exposure, an overweight exposure to Nigeria. So from that perspective, our own view is that we would like to stay more on the short end, because we think that's where there's the yields are fairly priced. But on the longer end, once you begin to go above 3 years, we think now may not be a good time to take too much exposure in that place because of the expected correction in yield subsequently.